In today's video, I'm going to be discussing the housing market and how home prices have just hit another all-time high record. I have all the details and what this means going forward, as well as everything you need to know, so let's get into it and discuss what's going on. First off, thank you so much for liking and sharing this video with those buttons right down below the video. I really do appreciate it. Thank you so much. Also, if you're new here or if you haven't done so yet, please make sure to subscribe to the channel as well with the big subscribe button, again, right down below the video. Thank you. Really appreciate your support. Let's get into it and talk about it. All right, so a new report that was just released by Redfin is showing that in the month of June, so not that long ago at all, we have now hit another all-time high record in home prices across the entire country when we're looking at median prices of homes. Again, another all-time high record, but wait, I thought the real estate market was crashing and burning right now. No, it's not, okay? I've been out in other videos recently saying this market is not going to crash and burn unless we see some other factors coming in, which I talked about in other videos, but I can allude to that later, or I can always make another dedicated video talking about that. But as of right now, this market is not going anywhere. In fact, it is still very strong. In fact, the median house price came in, according to this Redfin data here, came in at a median price of $397,954 in the month of June, okay? This is a new all-time high median price of homes across the entire country. Now, you might think, wow, nearly 400 grand for the median home in the United States? Yeah, exactly. Nearly $400,000 according to this right now, okay? So that's pretty high. I mean, seriously, that's really high, right? Now, here's the thing as well. They also took into consideration what would the monthly mortgage payment be on this nearly $400,000 home based on a 6.86% 30-year fixed rate mortgage. And again, the reason I came up with that number is because that is the most recent mortgage data as far as interest rates, and that's kind of what they're using on this. Now, they found that the average price, or basically what the mortgage payment would be for a 30-year fixed rate mortgage, is $2,749 a month, okay? Now, how many people can really afford that, okay? Not very many. That's the answer. I think we can all probably agree with that. Nearly, what is that? Nearly $2,800 a month is what somebody needs to come out of pocket in order to pay for the average or the median home price in the United States. Again, it's a lot of money, $2,800 a month, right? And again, your income needs to be significantly higher than that in order to be able to afford that, right? In order to go make it through underwriting and to be approved for a loan and things like that, income needs to be a lot higher than that. So just saying, right? But anyway, now I want to bring this to your attention really quickly because here's the thing. We're still seeing this with the real estate market right now, is that inventory is still relatively low. Basically, inventory, just another word of saying supply. Supply of homes for sale on the market right now is still relatively low. Well, if you've been watching the videos here on the channel for a while now, you know what I say in all the videos, right? Well, not every video, but I say it often enough, which is supply and demand dictates price in any market, okay? If supply is low, prices stay very strong, right? Prices cannot rise rapidly when supply is very low. It can't happen, right? So when supply is very high, then yes, prices will continue to go down, but prices are going to stay very strong and elevated when supply is very low. That's just how supply and demand works, right? But anyway, so that's why these prices continue to stay very strong, and I don't foresee this really changing anytime soon unless for some weird reason we see a huge influx of supply hitting the market. I don't see that happening. Here's why. 80% of the mortgages out there right now on homes, okay? So across the entire country, all the homes that are leveraged, right? So they have mortgages on these homes. 80% of the mortgages are locked in below 5%, okay? The other 20% are obviously above 5%. But with interest rates sitting right now, just under 7%, do you think anybody sitting on a mortgage that has a 3% interest rate, 3.5%, 4%, 4.5%, maybe something like this, do you think they're really going to sell their home if they don't need to so that they can move and lock in a nearly 7% interest rate? It's not really going to happen, right? A lot of people are not doing this. So a lot of people are very reluctant to move. A lot of people are very reluctant to sell their homes unless they need to for other reasons, right? But a lot of people that are thinking, we should move or we should do this or that, they're thinking, why? Why would we do that now when we can just wait 6 months, a year and a half, whatever it happens to be, and interest rates will come down significantly? Well, at least that's the speculation as of right now, okay? So that's what it comes down to, is that most people are just very reluctant to sell because they're locked in at such a low interest rates, and interest rates are so much higher right now. they don't really see the need to sell, okay? So that's kind of the problem, and why supply continues to be very, very low right now is because just people don't want to sell their homes, right? Okay. At the same time, on the other hand, with this, same equation that's playing out right now, is that buyers are also very limited. Why? Affordability. Look at the numbers I just told you, okay? The median house, okay, just under 400 grand. Again, $397,954 is the median sale price right now, okay? Or basically as of June, I should say, according to this Redfin report. But with interest rates being at just call it just under 7%, and basically a 30-year fixed rate mortgage costing, say, $2,749, nearly $2,800 a month. There's not many buyers out there that can afford that, right? A lot of people may be way below that as far as what they can actually afford on a monthly basis. So the problem being is that there's just very few buyers. There's very, very few buyers that are out there right now that can afford this. But here's another thing I want to point out really quickly. Let's just say that interest rates come down, 1%, 1.5%, 2%, 2.5%. Let's just say that we see interest rates drop down to, say, 5 or maybe even 4.5%. Do you think we're going to be dealing with the same market? No. Why? We're going to see a ton of buyers coming out of the woodwork saying, hey, I'm ready to buy now. Interest rates have come down, it's a little bit more affordable now, and therefore I can now come in and buy. But the problem is going to be this. There's going to be a huge number of buyers coming into the market. Well, what's that going to do? More demand for equal to supply means prices will be driven up, okay? So it's really not going to fix the situation at all. Affordability is still going to be an issue because even though right now with a kind of a cool real estate market and not a whole lot going on, very few buyers, inventory is low, supply is low, things like this, when we see more buyers come into the market, we're going to see multiple offers. We're going to see people having these little bidding spats at each other, going back and forth, offering higher and higher and higher, right? Offering over asking price. So all that's going to do is drive prices higher. So therefore, the affordability thing comes in again, whereas maybe, yeah, fine, interest rates have come down to 2.5%, whatever it happens to be, to maybe 5, 4.5, something like around that range. And yeah, you're right, that does make it a lot more affordable. But the problem is now the median price of homes has now also gone up probably another 7 or 10%, okay? So again, doesn't really make it all that affordable because we're just dealing with a higher priced home with a lower interest rate. Same thing applies, right? I mean, you're paying a mortgage on a higher balance, if that makes sense, right? So we're kind of right back at square one, and the problem doesn't really change. Does that kind of make sense? So I really don't foresee this real estate market going anywhere as far as like collapsing, but there are calls out there that suggest we're going to see a massive collapse in the real estate market, as in the residential real estate market, within the next couple of years. I don't know. We'll see, okay? Only time will really tell, but I would think we'd have to have some concrete changes in this market to see any type of substantial change as far as major price cuts, okay? Some selective markets, yeah, fine. The markets are very different all around the country, but until we see some very drastic changes in buying behavior, selling behavior, supply on the market, and things like this, and maybe a huge increase in interest rates, I don't really foresee this market dropping significantly anytime soon. Yes, will there be some pockets around the country that drop 5, 7, 10, 12, 15, maybe 20%? For sure. But the whole market as a whole, I mean, across the entire country? No. Overall, the entire market will probably stay very, very strong and just kind of continue doing what it's doing, just kind of grinding higher, if that kind of makes sense, right? So anyway, I hope this kind of makes sense, but I have other videos here on the channel talking about other updates on the housing market, things like that. But I came across this one and I thought, you know what? I'm going to talk about this really quickly because this is still very interesting, even though we continue to hear, oh, the real estate market's cooling off. You're right. It is a pretty cool market, but it's because of the limited inventory, limited supply on the market, and, the small amount of buyers that are out there just keeping driving those prices higher. That's about it, right? So again, anybody can list a house for any dollar amount. It doesn't matter. It's not that counts. It's the ones that sell that dictate actual, median prices that actually happen, right? Somebody can list a little cracker box for $1 million. Fine. That's fine. You can do it. It doesn't mean it's worth $1 million, but if it sells at that $1 million, now it actually goes into the queue of raising the median income or the median price on these homes, right? But if it's listed at $1 million, that has no impact on median sales price. It just is. Once it sells, that's when it's impactful. Does that kind of make sense? Right? So anyway, all right, so as always, please like the video down below, share the video down below, subscribe to the channel down below, leave a comment, question, feedback down below. Otherwise, please make sure to check out the other videos here on the channel, the thousands in the video library. The ones I've hand selected for you down below in the description or the top of the comment section. And right now, popping up on your screen as well. You'll see some videos there. Hope that helps you. Please enjoy your day. Have a good one. Take care, and I'll catch you again.